Welcome, everyone. So now let's say that you want to build a cannabis retail shop, or you're running one right now. Like some insights on how to run a best practices dispensary, medical or adult use. And there's been a lot of M&A activity. Now, what's going on with that? Well, welcome to our Arcview Access program. This is the third of a three-part series talking about infrastructure and what's going on in our incredible cannabis industry. I am Jean Sullivan, and I'm the Chief Investment Officer of Arcview Ventures and part of the Arcview team for many years. So today, we're talking about how to build a successful retail operation. What does success even mean? How do you strategize for the long term? And how has the market changed? How has it evolved? And what should both operators and investors know about in this really fast-growing marketplace? And how do you acquire loyal customers? We have some real experts on today to share some of those thoughts. We also really want to thank our alliance partners who help make these programs possible and who give us incredible resources for the industry. Zuber Lawler, who you'll hear today from Tom Zuber. Thank you, Tom. GrowFlow, Alpha Root, Work, Ice Miller, Dwayne Morris, and Green Growth CPA. These firms have supported Arcview's efforts for these webinars. We thank you for that. Now, let me reintroduce you to the Arcview Group. Our organization has certainly evolved over the years, along with our fast-paced industry, and your needs have changed too. And certainly all of our travel and our former participation in live events has changed, so things are different. But during that time, throughout the last couple of years, we have formed three subsidiaries for Arcview. One, Arcview Capital, which is a FINRA licensed broker-dealer offering investment banking services, and now a crowdfunding site. So we're really looking forward to populating that and making that successful. Then we have Arcview Consulting with a very capable team. We are standing ready in that group for those of you who are in cannabis license pursuit or seeking some growth strategy services. And Arcview Ventures, which is our principal investing group that Jeff Finkel and I, along with our Arcview Collective Fund, we run that, and we've made 15 investments and have 78 investors as part of that fund. We welcome you, by the way, to reach us if you have a company that you would like us to review. Now, we have a short survey, which our team is putting up right now. Please fill it out, or you could push it to the side and do it later, because this helps us to know and customize our programming needs for you. Now, I'm pleased to introduce Sarah Falvo. She's our community director at Arcview and moderating of today's discussion moderator. And I welcome a very competent Sarah Falvo to the stage.
Thank you, Jean. I appreciate it and all you do for the industry and especially the women in the industry. So it's always a pleasure to be working with you. So very excited today to talk about retail strategies. But prior to us starting the official program, I'd love to welcome Derek Shampoo from Green Tank onto the stage. Derek, go ahead and turn your camera on. And Green Tank is a marquee sponsor of the Arcview Group, and we are so happy to have their support and also have Derek on the program. Derek is the Vice President of Brand and Marketing at Green Tank, which is a Toronto-based vape hardware company. Since joining the company in 2017, he has helped grow the innovative tech company from 4 to 65 full-time employees that have serviced over 200 cannabis brands in the US and Canada. Prior to joining Green Tank, Derek managed a portfolio of travel businesses across North America that won the Canada's Best Managed Company Award 5 times and the Canada's Fastest Growing Company Award twice. And now a little bit about Green Tank. They specialize in the design, development, and manufacturing of high-performance cannabis vaporization hardware. They pride themselves on being your hardware partner, providing a full suite of world-class services to their customers, including pre and post-sale consultations, order management, and free access to their industry data. They call this analytical approach to vape hardware market matching, and they use it to help their partners achieve long-term growth and success by identifying unique patterns and trends in their market. Derek, it's so nice to see you again.
Hey, Sarah, thanks for the kind introduction.
Of course, you've done a lot so far in your career. Very impressive. So let's jump into it, because I know you're seeing a lot of things from behind the scenes, and we'd love for you to share some of it. So let's kick off with this. What are some of the key strategic trends that you've seen in the market between new and emerging markets versus more mature markets like Colorado and California? Are there differences in consumer trends for different states and markets? What does that look like?
Yeah, it's a great question. The biggest thing I think I've seen, especially over the last 2 to 3 years, is that new emerging markets, like say like in Illinois or Massachusetts, are learning very quickly from markets that evolved in more traditional markets like California and Colorado. And we're seeing that, product trends that typically took years are now happening within months. So they're really learning off of these existing traditional markets. But, what's really more interesting than that is that we're finding, every market has extremely unique selling trends. And for instance, you would expect a new emerging market like Michigan higher disposable vape sales. And when I say that, disposable vapes tend to be kind of like more of like a beginner vape. Right. Just due to their ease of use, right? But what we've seen in Michigan actually is quite the opposite. In the 510 cartridge category, it accounts for 96% of all cannabis vape sales in that market. Wow. And perhaps like an emerging market like Michigan has learned, the experience from California and Colorado. And I think the moral of the story is, always having a pulse on consumer trends at the retail level. And if you're not paying attention to that, I think you're falling behind.
Absolutely. And just even anecdotally, what are some of the trends? I mean, so I'm in California, so I see what you are talking about just in terms of new products and things like that. But at a higher level, what are you seeing are those trends in terms of retail and consumers in general?
Yeah, that's a fantastic question. It kind of leads into what I'm looking forward to in 2022 and where I'm seeing the market going, which is full 1 gram cartridges from a 510 cartridge standpoint. Just to give a little bit of data to back that up, in the US, 1 gram vape products rose to 60% of all units sold in 2021. That's up from 52% in 2020. We also service the Canadian market, and that jump in 1 gram cartridges is actually even greater. This year in 2021, 1 gram products have vaulted up to almost 35% of all units sold, and that was only at 4% last year. So, wow, 1 gram cartridges just absolutely trending in that direction. And from like a retail perspective, we're seeing that across the board.
That's wild. I am part of that group too. I am happy about the 1 grams. Get more bang for your buck. So Are there any interesting states that you're keeping a close eye on or seeing outlier trends from? Aside from the
sorry. No, absolutely. Like I said, like each market has such unique selling features. I think one of the interesting one is Nevada. Now, we just talked about, and what we're seeing across the board is 1 gram, the vape category going upwards. But in Nevada, 1 grams only account for 10% of total vape sales. Now, if you compare that to its next door neighbor, California, 70% of all vape sales are 1 grams. And so, you can come to the conclusion that, yes, okay, it's Nevada. Folks are flying into Vegas or Reno. They're only staying for a weekend or two. They're purchasing, maybe half grams. They don't particularly need the bigger sizes. But it's really interesting to see, that dynamic from a retail level, the differences between, Nevada and California. But, we're seeing those types of trends all over the place.
That's great. And what are the best ways for brands to keep up, or better yet, stay ahead of consumer trends?
Yeah, I would say, the number one thing is, any brand in this industry just needs to keep up to date on industry trends. And I know that's kind of just a blanket statement, like duh, like you need to keep up on the trends. But the beautiful yet challenging thing about the cannabis industry is that these shifts and trends are happening at hyper speed. You're talking about new strains, new formulations, new technologies, new ways of experiencing the plant in general. And, just a bit of a plug for Green Tank while we're here, we review and analyze sales trends on a weekly, monthly, and quarterly basis just to make sure that not only ourselves, but we're providing that type of data to our partners to stay ahead of the curve. And we actually, in collaboration with the wonderful people at Arcview and our data providers at Headset, we've been releasing quarterly vape reports that dive into the trends of 11 key markets across North America. And we're actually going to be discussing those trends and the vape reports on December 14th with you guys at 2 p.m. Pacific with the Arcview team and a couple of special guests. It's the Holiday Vape Workshop, which we're super excited about. We'll get into all the different insights that we're seeing and the shifting trends in all of these different markets. And I'll kind of leave this little teaser, including why disposable sales in Michigan rose 3,800% in Q3 this year, as opposed to last year.
Wow.
So we're seeing some really interesting stuff.
Well, I can't wait, and I'll be part of that conversation too. So I look forward to chatting with you then. And I appreciate your time and your insights today, Derek. Thank you.
Thanks, Sarah.
All right, we'll see you soon. So now we get to kick off the main program. So out of all the verticals in the cannabis industry, retail is one of the biggest revenue generating opportunities in the space. But actually getting to the point of being cash flow positive isn't something that everyone can attain. California has just under 850 licensed brick and mortar cannabis shops, but close to 3,000 retailers and delivery services operate in the state without a permit. This is a result of strict regulations, overtaxation, and hefty startup costs, which makes it very difficult for retail operations to thrive in the legal market. If you are able to have the financing and tenacity to launch a dispensary, the industry is still ever evolving, which can impact a store owner on a daily basis. So that's why we brought in the experts. And today I'm thrilled to welcome Christine De La Rosa, CEO and co-founder of the People's Ecosystem, and Tom Zuber, managing partner at Zuber Lawler. I'd love for each of you to just take a couple minutes to introduce yourselves and give an overview of your background. And let's start with Christine, excuse me.
That's okay. Hi, I'm Christine De La Rosa. I'm the CEO and co-founder of the People's Ecosystem. We are based out of Oakland. We started in the legacy market back in 2015, transitioned to the legal market in 2018, and have now been growing our operations across the U.S. Just outside of dispensaries, we're also in farms, manufacturing, and distribution.
Great. And Tom, how about you?
Thanks, Sarah. And hi, Christine. Pleasure, everyone, to be here. We're delighted to participate in another webinar with our friends at Arcview. We are certainly grateful for our relationship with such a great organization. I'm Tom Zuber. I'm the managing partner of Zuber Lawler. Under God, we have 7 offices now across the United States. We have attorneys that service a long list of Fortune companies, family offices, and funds. But I think one of the things that makes us somewhat unique is that we've been in the cannabis space for over 15 years. Way back when California was the first state to go medicinal, our friends started leading cannabis companies. They became leading cannabis companies, and there were 0 corporate law firms in the space at the time. So we became well known for doing the M&A work, the finance work, the IP, the FDA work, the litigation work, and so on and so forth. And so we were named Cannabis Law Firm of the Year last year. We represent a disproportionate percentage of the leading brands in U.S. and global cannabis, and we even founded a consultancy called Global Go, which now has affiliates in 10 different countries. So we're very excited about this cannabis conversation, even more excited about the fact that legalization seems to be accelerating around the world, and delighted to be here on this panel. Thank you, Sarah.
Great, thank you. So let's kick it off. So currently, retail shops, what is the progress that has happened over the last few years, and what are some of the problems of today? And Christine, I'd love for you to kick this off, because being in the legacy market, then transitioning into legal, I'm sure you've seen different problems in both of those realms. So I'd love for you to kick that off and just kind of see, talk about what were the problems then, what are the problems today, and how are they different?
Wow, I wish I could tell you that they were different, but they're not. The problem is always the same. I mean, to me at least, it's finance, right? Being able to get finance to get your dispensary up and running. We see this a lot with our social equity applicants who have licenses, like they're holding licenses, but can't realize the profitability of those licenses because they don't have access to capital. Happened to us, happens to a lot of our friends, it's happening right now in other states. So I would say like that's still the problem, right? That's still the number one problem. But there's some other problems that are also happening, and we see this around the M&A, right? That's happening right now. Everybody's gobbling each other up. And so if you're a single operator, you have one dispensary in your hometown, or you have one dispensary in a large metroplex, you're really, in danger, as Whoopi Goldberg would say, you're in danger. But also then as you start to look at the federal legalization, and you start to look at like what they're looking at in terms of like the CAOA or the MORE Act, and you're realizing that if you're a small company, maybe one dispensary, one or two dispensaries, a single vertical that doesn't belong to a bigger vertical, that federal legalization definitely poses an extinction event for your company. So these are all big things that are happening right now. And most people are just thinking about, how do I open my door and sell some weed? And really, they have to really be thinking about these larger pictures, because if you don't, then you're going to be taken unawares. You'll be like, how come I failed? Like, why is this? It's because all of these other things were working to make sure that you could not be successful.
Exactly. And Tom, being in the industry for so long, 15 years, and based in California too, or you are, seeing that transition, what did you see were the problems from a legal aspect back then? How are they different from today?
Sure. Well, these problems are nationwide, so they're not necessarily particular. I guess the problems don't discriminate by state.
Yeah.
Though obviously California in some sense is further along than some states. And so I'd say the number one, I agree with everything Christine said. So all of that is truth. I think also one thing I would add on top of that is the illegal market, right? So in California, at one point, the illegal market comprised 80% of sales in the state of California. That's gone down somewhat, but it's still well over half. And that's a very, very large number. And what that does is it puts a great deal of pressure, more than you would think. That's a very large number, but the disruption to the legal market is even greater because these illegal companies aren't paying their taxes, right? They're not compliant. There are sometimes pesticides and even rat feces in these products. And so one, it's a terrible problem from the standpoint of consumer safety, but it's also a problem from the perspective of operators that are paying their taxes, that are spending the money to be compliant, right? And how do you compete with somebody that's not doing that? So I'd say that that's one of the biggest problems, in addition to the problems that Christine mentioned. I do agree also that when federal legalization happens, it is potentially an extinction event. It's also an opportunity event, right? Because many of these companies that are coming into the space are going to look to acquire things, right? And I think that it speaks to what Christine said. I think one other way to look at it is to prepare for that event, right? So when you're coming into the market, one of the things that we've seen over the past 15 years is that the companies that have thrived, we've started with companies very, very small and watched them go out of business. And we've started with companies very, very small and they're billion-dollar companies today and still our clients. So we've seen so many things done right and so many things done wrong. And I'd say one of the things that's done wrong most often is just not treating your cannabis business like a business. And that means in terms of having the documentation infrastructure, having the leadership, the executive leadership, and really focusing on that way in the way a traditional company would. And also, I will say, focusing on the legal and accountancy aspects of running your business, having your books in order. So what happens is that companies will just go along one foot in front of the other. And I think that illegal legacy, if you will, informs the operation of businesses in this newly emerging legal environment. And what that means is that there's still a flippancy, I think, about the ones and twos and threes and A, Bs, and Cs of running a business, having your documents in order, having your IP in order, making sure that you're not double dipping into illegal sales out the back door, because that stuff does come out in the open, and sometimes it results in liability and damages in the immediate sense. But what it also can do is it can create credibility problems when you're looking to get acquired later on. So ultimately, what's going to happen if you do, let's say, look to get acquired later on, because as Christine pointed out, when federal legalization happens, there's going to be pressure to either do that or risk going extinct. What they're going to look at are these things that I'm talking about. They really do dig into these things. And if they're not there, do you know what they do? They pass. So really, it is important to start treating your business from day one like a business. And I'd say that that's one of the critical components of thriving in the retail market, whether in California or New York or anywhere else.
Absolutely. And Christine, I think you can speak to that as well, because again, coming from the legacy market into the legal market, trying to, run shops, deal with the staff, deal with inventory, all of this stuff. What do you now realize transitioning and scaling up were the most important foundations to have in terms of, kind of getting your ducks in a row in terms of the business aspect?
I would say that the biggest thing is and this is going to sound a little bit bizarre because you would think that I would be saying, getting your financials together, getting your attorneys, everything that Tom is saying. I would say is getting your regulation and government section of your company together, because we have a legacy issue in California because the government did not figure out how to transition the legacy comfortably into the legal market. We always go, I hear a lot of stuff saying, the legacy market is still so great. It's great because they created the market. The legal market that we all enjoy was created by the legacy market. And if we had been smart at the time in California, and we see New York is doing it better, I'm hoping, I have high hopes for that. Helping them transition to the legal market means that you don't have to fight with the legacy market because you've transitioned most of the people into the legal market. But we didn't do that in California. In California, we decided to continue to keep policing and, burning tons of pounds of marijuana rather than helping these farmers and manufacturers transition over. So I would say, and part of it's our fault. Like when I started out, I was so excited about Prop 64, and I just waited. I was like, they're going to pass it, and then the regulators are going to tell me what I need to do in order to get my license to operate legally. And that was the wrong way to do it. I should have been in every one of those meetings, commenting on every one of the things that they sent out, because we could see after the fact how the regulations actually didn't help the operators. And we have to be super careful about the policymakers, the advocates, and the activists, which I adore. I love them. They're part of my community, but they are not operators. Right. So when they're asking for stuff from the government on our behalf, more than likely it's going to hurt Black and brown operators than it is going to actually help us. And so that's what I would tell people. Get involved with your government, with your regulation in your state to make sure that they don't regulate you out of the industry.
That was a great point. And let's go back to, the M&A activity, expansion, consolidation, all of that. So Christine, as an operator, what do you think about M&A activity? What are your own goals for your company? And have they changed since you came into the space originally?
Absolutely. So like Tom was saying, you see a lot of M&A, but you have to have all of your ducks in a row. And so I am the poster child of the person that was running pounds up and down the 580 back in my legacy days, right? I would literally have pounds in my back of my 300, and we'd be selling them in our dispensary, our underground dispensary. So I didn't know anything about 280E. I didn't know anything about having accountancy. I had no idea that I paid all of my employees in cash. And, I say that publicly because there's a lot of legacy market people that need to know, stop doing that. Don't do that. I have spent at least the first 2 years of my company in the legal market fixing all of the things that I did wrong. I didn't know I needed to have a lawyer. And on top of that, a cannabis lawyer. Because I had some lawyers at the beginning who were not cannabis lawyers, and they cost me a lot of money to do absolutely nothing because they didn't know about cannabis. And I just thought you could go to any lawyer. Accounting is super important as well. We didn't have accounting at the beginning. I was doing QuickBooks. You cannot run a company on QuickBooks, so stop it. Don't do it. Basically, I have lived how not to run a cannabis business, and then had to go and fix it, and spent about a year restructuring the whole company, getting all of my advisors and all of my service providers together. And I would say that if you're starting a new dispensary, you're going to be like, oh, that's so much money. But I guarantee you, take it from somebody who spent too much money doing the wrong thing, do the right thing right now. It will save you so much time, so much energy, and so much heartache.
That's great. Thank you for sharing. And let's have a little bit of a truth bomb right now, but either one of you, can you give us an estimate of the minimum that it takes to launch a retail dispensary shop?
Do you mean in terms of cost?
Yes, cost. Because I think this is something that people don't really realize.
Sure. I mean, that can obviously, Sarah, and I know your question assumes this, can vary immensely based on location, based on
Right.
ownership of assets as opposed to leasing assets and those sorts of things. So I'm going to give some very rough numbers here, and they could go up
Please.
by 50% south or 100% north, depending on those details. But I'd say you're looking at in the neighborhood of $1 million. Now, again, that can really go down 50% or up 100%, based on various details. But that's a ballpark figure, just so you're not thinking in terms of tens of thousands or just a couple $100,000. It certainly is going to be more than that, right? So for instance, you're going to have to, before you even apply, if you're going to acquire a license, then obviously you can see that you're going to pay even more than that for an ongoing operation that's on the verge of profitability. But let's say that you wanted to start out of the gate and you want to apply for a license, right, in a newly emerging municipality, for instance, then what you're going to have to do is in the process of applying for that application, you're going to have to tie that application to real estate. So you're going to have a claim to that real estate, either through a verifiable lease or through ownership of that real estate. Furthermore, once you have the real estate, and I'm talking about the foundational real estate, the land, you're actually going to have to build something on that is going to be the retail shop itself. And so that's going to take money again in the form of either payments through a lease or more probably at that stage, if you're applying, you're going to have to construct that thing and you're going to have to get financing to do that. Then you're going to have people to operate that vicinity. You're going to have to really have somebody who knows what they're doing. And to Christine's point, it really is important to get people who know cannabis, not just your lawyers, not just your accountants, but certainly the people running the actual operation. And so the greatest bit of success that we've seen from companies is when they combine that cannabis expertise that Christine was talking about with that traditional corporate expertise, which would be cannabis, but more often is non-cannabis, given the emergent state of the legalized market around the world. So again, you're going to see the most successful companies that we've seen historically, they have folks that really, really, really know the plant, that know the industry, that know the legacy issues and those sorts of things, and that are smart enough to hire the lawyers and accountants and consultants that know that stuff, but also bringing on folks that have actually grown companies, whether inside or more often outside the cannabis industry, from a smaller state to, say, a publicly traded state, right? And there's so much that goes into that. Without both components of that knowledge, I think the chances of success are drastically reduced if your definition of success is going public or having some larger exit in the future. So that would be I think the parameters of getting something set up. The hurdles are high, but I will say also that even though that's maybe a bit scary up front, but it is traversable terrain. And furthermore, it's been traversed successfully by folks that have entered the market for the first time. One of the exciting things here is that many of the companies that are thriving today really didn't have, in terms of their founder, in terms of their founder lineup, didn't necessarily have that experience, because this is also new to all of us, but they acquired these things that I'm talking about. So it is traversable terrain, but I think, Sarah, the implicit point of your question is a good one, that you really should be aware of the thresholds that are involved, and they can be substantial, particularly from a financing standpoint.
Absolutely. And I think in any vertical of this industry, that's the case too. And I just wanted to bring that up just to make the public aware too, because it's not inexpensive to be in this industry. I'll say that. And then Tom, going back to, when we were talking about acquisitions and things like that, for the smaller shops, the one shop, maybe two, what should they be focusing on for a successful exit? Maybe they're, is it more of the finances? Is it more, just the whole package? What does that look like?
So a couple notes there. First, again, I really would focus on and Christina alluded to this as well, the 1, 2, 3s, the ABCs, running your business well. And you'd be surprised how few companies do that in the cannabis space. And that's I really mean that quite literally. There are very few companies that really focus on that in a deliberate sense, as well as I think they should. But that's an opportunity, though, because the companies that do focus on those things, they tend to really reap the rewards of that. So that means having your documents in order. That means having a solid advisor base consisting of accountants, consisting of consultants, consisting of lawyers, and also above all else, having an executive team that includes both of those components that I was talking about, those folks that really know cannabis well and those folks that really know how to run and grow a business, whether inside or outside of cannabis, having those components, both of those components in your C-suite. But also, I think part of it is really understanding that what an acquirer is going to want to see is profits, or at least a visibility to profits. And so a lot of times what we found, there have been companies that have raised a great deal of money in the 9 figures and blown through that money by trying to do everything at once or trying to do too many things at once. And really what we've seen also is that companies that are disciplined, that really say, we want to be awesome at this, and we want to, and that really stay true to that, and they get to profitability or visibility to profitability earlier, that is attractive, right? And then you can talk about all of your dreams of expanding in 5 different directions once you're profitable and you're profitable. But the folks that start doing that out of the gate, they find what we found is that they don't get the profitability as soon as they'd like to. And that really is a hindrance, because there are so many opportunities from the perspective of acquirers today. So have a tunnel vision toward profitability. That would be my biggest point of recommendation, and stay disciplined in that regard. Get the profitability first and get more ambitious later.
I love that. And Christine, for you, what is your goal with your dispensaries, and has it changed? You know, when you started this, were you like, this is going to be my baby forever, I'm going to die in, you know, the vape section of my store or something like that? Or has that kind of changed as you've seen what's gone on over the last few years too?
I mean, I think for me personally and for our company, we're really looking to build a high market cap for the company itself. Whether we're going to be sold or if federal legalization happens and we IPO, what Tom is saying is correct. We have to move towards profitability to get either one of those things to happen. And in some cases, if you have a very strong brand, even if you're not at profitability at the moment, you still are, based on your particular brand, you might still be very appealing to a larger person that would want to acquire you. And I was that person at the beginning. I was the person who's like, I'm going to own this company forever. It's going to be, I'm going to die on this hill, you know?
Yeah.
And then I heard the owner of Carol's Daughter, which is a large African-American brand that got purchased. And she said, everybody should be building to sell their company. Like, that is the wrong way to think about things. You should be building to sell. And that really struck for me, because as a person of color, you know, we're kind of always taught that we're going to have to work for the rest of our lives. And so she was able to say, like, no, you can build a great brand, you can build great products, and then you can sell that and move on to do something else that you might want to do in your lifetime. So for me, I would love, you know, to IPO the company, but I would also be available to be acquired by a larger company that understands our ethos. And I think for us, our particular company, what we're building towards is that federal legalization, where we know there's going to be some type of social justice built into that bill. And so when we're thinking about, we're not just thinking about it from a profitability standpoint, we're thinking about it from that standpoint, we're thinking about it from a PRI standpoint, like, what are all the things that would need to be put into the cannabis industry once it's federally legal? And so that's really what I feel like we're building in our company. But if you're a company that just has one dispensary, you only have one dispensary and that's what you have, you can also be building towards that as well, because your brand, if you have a good brand, a strong brand, and you're building, and somebody comes up and says, hey, we would like to acquire you. If you have that pathway to profitability, if you have all of your ducks in a row, that means that you're ready. Even if you don't want to sell it, know that you're ready. Be ready. It doesn't hurt to be ready.
That's great. Great advice. And then Tom, kind of going back about that social equity conversation, how do you suggest companies and brands build and scale with social equity in mind?
Sure. First, we're a minority-owned law firm. We have been since inception, and we've been certified for most of our history. So this is a passion point for us. I think the first thing is really just to appreciate diversity itself. I think getting out of that mindset of we're going to be diverse so that we can get this license, as opposed to saying we're going to be diverse because it makes us better. I think that that's really important, because it does play out in terms of the efficacy of incorporating social equity norms into your business plan. And so what I mean by that is really recognizing that ultimately you're looking for the best talent, period. And I think that it's almost mathematical that if you're opening yourself up to the entire gene pool, you're going to have access to better talent. And I think just thinking in those terms, if you're going to have diverse management, you're going to make better decisions. because having homogeneity, having 5 Toms running Zubralola would just be a terrible decision. I think I bring some good things to the table. I certainly hope my partners agree, but I don't bring all of them. And I think so having that notion that groups that are diverse manage organizations better than homogeneous groups, I think that is the first step, really, is just to embrace that truth. Then going from there, I think it becomes simple. You're looking for the best talent, so find the best talent, and the best talent, almost by definition, in my opinion, once you're dealing with larger organizations, especially, the need is amplified with larger organizations, is a function of the diversity of the leadership group. So that would be the first step. Another thing that I would look at is this. There are the goal isn't just to get a license, and that's unless you're looking just to sell it, and that's its own host of thresholds. But let's put that aside. Let's put aside the notion of just going fishing for a license so that you can immediately exit, right? And let's say that you actually want to be an ongoing retail operation. I think the thing there is to recognize that the goal isn't to get the license. The goal is it's to have a successful ongoing retail operation. So you're not looking to just get a figurehead that you can put on the application and it's just going to stay quiet. You actually really have to do your homework to find somebody that's going to be a key contributor to your venture, even a principal, a primary contributor to your venture. And if you're not thinking in those terms, I think it's a recipe potentially for a higher probability of failure.
Great, thank you. And Christine, when we were talking on our prep call about things, you said something interesting that I just would love for you to elaborate on. So you said, I had to become comfortable with debt. So can you talk about that a little bit? Because I think it's scary in nature for people, just that word. So can you just elaborate on that a little bit? Because I found that really interesting.
Yeah, absolutely. So one of the things I didn't know when I started, that there were these things called a capital stack, right? I'm like, capital stack. I come from my master's in humanities. It's not in law, it's not in finance. And so when we were always thinking about taking an investor capital, we were always thinking about a convertible note, or we were thinking about a safe. We were thinking about some place where we give up equity. But what the big guys do, which I've learned since time, is that they have capital stacks. They have some debt here, they have some assets here, they're buying buildings and they're selling the buildings as a sale leaseback so they can get more capital. They have equity investors, they have convertible, they have a lot of different types of capital to prop up their company for growth, right? And one of the big ones is actually debt. And if you look at a lot of the M&A that's happened in, like, say, the last 12 to 18 months, or you see some of the big deals that are going on right now, you see that there's a lot of debt. Debt is really happening there. And so a lot of times when you're a small business owner like I am, or you're a person of color like I am, you think of debt in terms of credit cards, right? You're like, I am in debt because I owe JCPenney's, or that's going to date me, but X amount of dollars on my credit card. And we don't think of debt as the way debt happens in financial institutions. So really understanding how debt works for companies, how it might work for your company, how you might leverage that to get access to additional capital is really important. And a lot of people don't know that. So we're over here giving away, tons of equity for capital at very high prices because we're at the beginning phases of our dispensaries, instead of going out for the debt so that we can hold on to as much equity until we raise our valuation. And so that's why I had to get comfortable with debt, to know that I can take the debt, create more revenue from that debt, and then go out and maybe get an equity investor at a lower, it didn't cost me as much equity as it would have if I hadn't thought about the debt.
Everyone should be writing this down on that program. You don't want to give away the whole basket of eggs, right?
Yes.
Very important. So let's actually talk about something a little different for a second. I would love to talk with Christine about customer acquisition and loyalty. You have a very strong brand and a very strong presence in the space, and very loyal, just supporters in general. So how did you get there? What's important for companies to do that?
I think it's authenticity. I think Tom hit it right on the head when he said, you can't put in a figurehead and just think that that's going to, oh, I have a Black woman, so now I'm going to have that. Or I'm going to have an Asian woman. Or I'm going to have somebody who has a chronic illness like I do. You actually have to be authentic in your brand. Mm-hmm. And so I think that this is where a lot of larger companies that I see really have some failure points there, because they are not authentic, right? It was very interesting back in 2020, right after George Floyd, somebody was like, don't just put up black squares, right? And I think that was really a call to action for the cannabis company, cannabis world, because we started to see a lot of movement around social equity, around social justice, that was actually doing something and not putting up this black square. And so I think that's the biggest thing for customer acquisition. They want to know, especially when you're looking at the millennial generation that's coming up, right? The millennial generation, if they haven't already, are taking over as the largest, market. They really believe in putting their dollars where they believe the dollars should go. They really are very conscious about how they spend their money. So if you are not authentic, they're going to catch up on that, and they're not going to go back to your store. They're not going to support you. They might go if they need, if there's nothing else around and they really need their, gram of whatever, but they're not going to consistently go to you. And the other thing is that when you have that authenticity and you have the quality, right? It's not just the authenticity, but you have to have the quality. Your customers will come back. They'll even pay a little bit more for that really great weed. But you also have to have bargain weed, right? Like that's also the true statement, right? Because there's some times where you just don't have that money, but you definitely still want to get your eighth, and maybe you can afford $25. So I think being authentic, I think also having good price points, and also making sure that you live by your standards that you set for your own company.
That's great. And I think authenticity in this industry across the board is so important, no matter what you do. So I'm glad you brought that up. And this question is for both of you, but what are your opinions on keeping your brand tight and your IP separate?
Your brand tight and your IP separate.
Yes.
What do you mean by IP separate, Sarah?
Well, let's talk about actually retail dispensaries in terms of IP. What do they have in terms of IP that they, gives them an upper hand?
Sure. So the first thing is, I would caution everyone listening who hasn't yet thought about such subject matter to actually think about IP. So that's the first thing, Sarah, because a lot of companies don't, and it really is, I think, to their detriment. And we deal with a lot of the ramifications of that in litigation and so forth. So the first thing is really to understand that ultimately, if you exit, it will be a function in some large extent to IP, to the brand, the goodwill that you've associated with your retail shop in the eyes of the relevant public. Now, in the context of cannabis, there are complexities in obtaining IP protection, particularly at the federal level. So our law firm happens to be truly pioneering in that regard. We have obtained meaningful federal trademark protection for cannabis brands in respect of extract, in respect of dead flower, and so on and so forth, while disclosing to the PTO that our relevant clients sell THC products in other contexts. So that's quite a neat trick, and we can get into that. With retail shops, it's more complicated because the retail shop, by definition, is retailing cannabis. So that gets a little bit more difficult. And what you end up doing is you end up looking to both, as well as federal protection where possible, you're looking for state protection, right? And so it really, the way to think about it is to take a holistic approach of grabbing whatever IP protection is available to you today, because ultimately, when you do get acquired, companies are going to want to see that you paid attention to those things. And if you don't pay attention to them now, you're going to have to pay attention to them when you exit. It's much more complicated to do that. And you often uncover rocks that can really throw a wrench, and potentially a dispositive wrench, in an acquisition process, meaning they'll just walk away and say, this is too complicated for us, because there are options out there. So I would say that really the thing is, one, to focus on brands. That's the big step, because many people don't. They just say, I'm going to throw up my shop, I'm going to start selling weed, and everything's going to be great. And that is not the case if you're aiming big. Focus on IP, focus on brands, understand that you really do need, as Christine pointed out earlier, you do need, in this particular context, especially, not exclusively, but I think especially, you need attorneys that really understand cannabis, that are excellent IP attorneys that also have been in cannabis for a long time, because the issues there are just unique. They're precisely unique. The PTO has never faced this type of issue before, not even during the age of alcohol prohibition, because this is just weirder. So get attorneys that know what they're doing and have a holistic conversation about branding and make it one of your priorities.
I 100% agree. I'll tell you that in 2020, we spent a good 6 months pulling all of our IP out into a different company, like moving everything out so that we would have everything housed in one spot. Because for us, we don't just have IP in terms of brands or in terms of a dispensary, but we have a lot of intellectual property around how policy is being written, how government, we've done white papers, we've done a lot of things. So how do you protect all of, how do you protect all of that intellectual property. On top of that, we don't just have financial KPIs for our company. We have impact KPIs for our company, which is something that we developed internally in-house specific.
I love
So
that.
that's really important to have that in an entirely different company, so that when you are going to be acquired or whatever it is that you want to do with your company, that you're able to say, I have this protected over here.
That's great. Thank you. And Christine, can you just speak a little bit about just fundraising in general? Because there was a question in the chat too. It was, where does a minority hemp company business owner, New York hemp license holder, and adult use license wannabe look to find the right investors to raise that said million? We don't tend to run in those circles. And we get this question all the time at Arcview. And, it's that whole chicken egg dilemma thing, but I'd love to have you just kind of share your experience with that.
And I don't really think it's a chicken and egg thing, just personally.
Yeah.
I think it's about having everything that you need together. And Jean was my mentor back in 2018 or 2019 when I was at Arcview. And it was very helpful. And I mean, I was definitely very green, and I was like, what am I supposed to do? But the very first thing that you should do if you're looking for any type of investment is to get your investor data room together. Before you talk to any investor, we have this idea, I think because we're in the cannabis world, and we could go up to people and say, hey, dude, you got 50 grand, you can let me borrow. And they did, under their bed. We're not in that place anymore, right?
No.
And so having the investor data room requires you to do a lot of thinking about your company. It means that you have to have your EIN, you have to have your operating agreement if you're an LLC, or your bylaws if you're a corporation. You have to have your pro forma for 3 to 5 years. You have to have your historical financials. If you do that first, before even thinking about going to get a dollar from anybody, you will be prepared when the moment happens. There was a lot of moments for me back in 2017 and 2018 where there were moments where I could have gotten investment, but I was not ready as the company. So that investor checklist or that data room is super important. And we actually have put together an investor checklist so that before anybody gets to us, when they say, hey, we're looking to raise capital, I send them the investor checklist and I say, get me all of this, and then we will have a meeting with you. And what that makes the founders do is really think about, am I ready to take investment? Because if you don't have these like 15 things on this investor checklist that I sent to you, then you are not ready.
Yeah.
And so that's what I would say.
I love that. And Tom, please jump in.
I think that's a great approach, Christine. So that checklist is a great succinct approach, and I agree with everything she said. It's all conspicuously true and constructive and helpful. I think also what I would mention, just to put a finer point on one smaller aspect of things, it's going to be difficult if you don't have the things on that checklist to raise money. So that's the corollary, right? So just to understand and have a realistic expectation of that, unless you're going to family and friends, in my view, it's going to be very, very, very difficult to raise money from anybody who knows what they're doing, unless you have the things on that checklist that Christine is referring to, right? So if you've got a license, you're in good shape, right? If you don't have a license, then do you have access to the real estate? And that's not just saying I know a guy or I know a woman, right? It's really having, okay, I've got the lease here and here it is, or I've got the ownership of this and here it is, and it's in an opportunity zone, or it's in a green zone, or whatever you have. So having those things in place, having your leadership team in place. If you're going a social equity route, then having meaningful social equity leadership, again, along the lines of our previous conversation, not just a figurehead, but somebody who is actually going to be helpful, is going to be a true leader, is actually going to have their hands on the wheel of that business. And there are other things on that checklist, but Christine is absolutely right. And the corollary I want to emphasize, if you don't have the things on the checklist, just focus on the checklist.
Absolutely. And I know, yeah, go ahead, Christine.
I just put in the chat, if you send an email to us, I'm happy to share that investor checklist with you, so that you can start to work through it, because something that you should just start doing now, even if you're brand new, you don't even have a license, you haven't even applied for a license, just starting to get this together. I'll tell you, when I first got that checklist from my mentor, who was Sarah Batterby, I felt such a sense of relief, because I'm like, oh, this is what I need to do. Because a lot of times for people that are not in the financial world, it feels like this weird place that I don't know what to do. So having a checklist really made me feel good. It's like, oh, okay, here's a thing, check it off. Here's a thing, check it off. And sometimes that can make you feel more grounded.
I love it. And thank you for offering to send people that. So again, Christine dropped the email address into the chat. You can reach out to her for the formal checklist. And I know there was another question in there about business plans. And no, you don't necessarily need a consultant per the question, but if you're not going to use one, you better make sure that your business plan is tight and all the information is in there, including just what you're going to do, like going forward, and anything else, Christine and Tom, that you want to add for business plans, because that is one of the most important things for people.
Yeah, I would say another thing that we've seen go wrong on a litigation sense, to be clear, where we're not doing the deals. When we're doing the deals, things tend to go very, very well. But sometimes we're asked to do cleanup, and that happens. So making sure that your documents are tied up when you're taking the dough, making sure that you know who you're taking dough from, making sure that you're being truthful about the status of your license and the people associated with that license, because things do blow up on the other side, and that can be very expensive and distractive, and ultimately it can destroy business. So really, I would take care to make sure that you're not just receiving money, but receiving it well, and doing so with documentation that protects you and also protects the organization.
Can I just say that I love that Tom said dough?
Yeah.
I like that. You're gonna get some dough.
I love all these webinars because you were talking about cash under the bed. That's a real thing. So we're just being real and authentic, folks, with you. But Tom, I'd love to ask you this specific question too. What is an example of one of the most successful exits you've seen?
The most successful exits that we've seen. Well, I mean, there are a number, but I think you could look at a pseudo exit by Nancy over at Warner Brands, right? So she just got $300 million for an option to buy her business, and that's an IP business substantially. I don't want to oversimplify what her business is, but I think she'd agree that she's done amazing things by leveraging IP, I guess is the way I phrase
I have
that.
a question for you then. Can I ask you a question, Tom?
Sure.
So wasn't that Canopy Growth?
Yes. Yeah.
And didn't they just say this year, do you think that that's the reason they're not going to be profitable this year? Because I just saw in something that they were like, we're not going to be profitable this year. And the CEO or one of their board members stepped out that was from Constellation. And I keep wondering, I'm like, as just a person, like when I'm looking at this M&A, I'm like, is it a real M&A? Like, is that real if you have your board members like resigning and stuff? Like, what do you think about that? Like, that kind of would freak me out if I was that person, right?
Yeah, well, I'd say if you say that would freak me out if that was that person, are you saying Nancy or are you saying?
Well, yeah, because I'm like, you optioned for $300 million and then told all of your investors you're not going to make any money this year. Like, I'm like, that's weird. Yeah,
well, I think that there's a cynicism in some parts of the industry, Christine, and I'm sure you've heard this as well, and Sarah, that was, I guess, that there was a premeditation behind that deal from the perspective of Canopy, which was to really have a state of excitement in the context of perhaps some less exciting news. So I really must confess, I haven't thought about that issue enough to have an opinion either way, but I do acknowledge that cynicism is out there. But I think also that the one of the most, so that's obviously a very exciting thing from Nancy's perspective, yes. Certainly. It's very exciting that that's an option and that she was able to pull that off. So it just speaks to her being, I think, just a great business leader. But also, I think one of the most successful exits I've seen is a non-exit. So I won't mention the company, but it's still a private company today. And we're talking to them. We're like, are you going to go public? Because they're crushing it. And they've been crushing it for years. And they're like, no, why? We don't need the money. We're just going to keep doing our thing, and we're just going to keep making millions. And they're doing not millions. I mean millions,
a month.
Yeah, no, per week. I mean they're really crushing it. So and so I would say that they're at this point they're one of the most valuable cannabis companies on the planet, but they're not public. So that I think
that's
is also
interesting too.
You don't have to exit. You can just continue to hum along. And the great thing about this company is, well, they're private, and they at the same time, they have the discipline of a publicly traded company in terms of running their business and making profits. So it's really a great, sweet place to be on the eve, potentially, of the end of prohibition here in the U.S. I don't know if we're on the eve, but it's certainly somewhere on the horizon. So that's just a very, very exciting place to be. And of course, what we're looking at there is potentially going public on the NASDAQ or the NYSE, right? And that's just a whole different conversation. And I think, obviously, a more exciting conversation in many respects. So there are a number of ways to exit. And I don't think that there are companies that went public that regret it, right? Because then all of a sudden you've got the pressure. Every decision you make that's going to be public, you've got to vet through a lens of, is this going to affect my stock price? And then so what happens is you're not in control of your business entirely anymore. The shareholders and the public perceptions of your success are, and so then you're going for headlines. And going for headlines isn't necessarily the best place to run best way to run a business. So there are reasons to have an exit by going public. One is liquidity, right? It can be cheap liquidity. And that can be, it's not always, but it can be cheap liquidity, relatively cheap liquidity. And that's a reason to do it. All of a sudden, also, your company becomes liquid, so you can start acquiring things with your stock. And that could be a very powerful means to growth and valuation. But at the same time, recognize that there's cost to that. And one of the costs is that you are now not necessarily in control of your company, in the sense that your decisions, whether you say so or not, whether you admit it or not, you're going to be making decisions as a function of the public perception of your decisions. And we both know that the public doesn't always have the greatest amount of patience in terms of long-term strategies. And so that can really get in the way of doing smart things for your business or avoiding doing dumb things. So just understand that cost. And so define the exit that you want, and it doesn't have to be going public.
That was a great way to say that too. And so we're nearing the top of the hour. So I'd love to just get last thoughts or any advice or any just parting words. So Christine, start with you.
Well, if you are thinking about owning a dispensary, thinking about opening a dispensary, go to webinars like this. I found them to be invaluable to me. They're definitely, you get a lot of information at these webinars. So definitely keep signing up for the Arcview webinars. But the other thing is to seek out your advisors and your mentors, right? Who you look out, not everybody has the time, but there's a lot of people that do want to help people in the cannabis space, and having those advisors and those mentors are super important. They were invaluable to me as I was growing the company, as I was trying to learn as I was growing the company. So I highly recommend you seeking those folks out. And one of the people that I would say, one of the people in your toolkit should actually be somebody who's very well versed in financials. And you're going to be like, well, there's not people giving away free advice for that, but you'd be surprised how many webinars you can join that talk about capital stacks, that talk about what Tom was just saying, or that talk about that. Go to them. Even if you don't understand, you get to ask questions. And so that's what I would tell you. To be successful in this business is to get as much knowledge and as much help and as much mentorship as you can get. And then, of course, in the hopes that you'll be able to get the capital when you're ready. That's
great. Thank you, Christine. And Tom, parting words?
I just want to say, Christine, it was a great pleasure speaking with you, and I learned something from you. So it was really a lot of fun. And Sarah, it's always great to see you and Gene and Jeff and Laura and everyone at Arcview. So thank you so much, and thank you everyone for attending. And I would like to say that there's a lot of opportunity here in the cannabis space, and if you do have the discipline, the industry could use it. So I encourage you to get your ducks in a row as we've discussed here. And if you have any needs relating obviously to IP or to deals or to litigation, I don't know any law firm that's done more pioneering work in the space than Zuber Lawler. So you should feel free to shoot me an email.
Awesome. Well, I just want to thank you both again. It was so great chatting with you. Once again, I wanted to thank you for joining us today, and we'll see you at our next program. Thanks. Bye.